So in this video, we're going to create the financial statements for July. July has turned now, it's now August, so we have enough data to go and make the financial statements. But we're also going to talk about another thing, and it has to do with this automatic system of transaction pulling in that we've built here. And it's not something that is often talked about when it comes to budgeting, but this is one of the benefits that you get automatically when you have set up a system like this. Okay, and it has to do with what we've defined here as truth. Okay, we've set up a bunch of cards here, and I'm going to show you how I caught this in just a second. I was just looking at this before I hit record here, but what we have here is a source of truth, basically. And in this box, all of the credit cards should have automatic full statement balance to be paid at the, whenever these cards are supposed to be due. That's how we were operating, because that's what we were, that's what we set up, and that's what we believe, right? But it turns out this wasn't actually the case. Some of these banks, for whatever reason, the online portal wasn't working when I did it, or it didn't work properly, I didn't hit confirm, or whatever it was. I don't know what it was, but it didn't actually end up happening. So let's go and look at it. Let's go ahead and categorize all the transactions. We have a couple here to do here, as you can see. And then I'm going to show you exactly what I mean and why this budget is so powerful. And basically it ended up saving us, well, it's not going to be a late fee, but if we hadn't set up that automatic transactions, it would have been over $100 in late fees, but it ended up saving us, I don't know, maybe 10 or 15 bucks in interest. So we're going to start at the bottom, like I always do. And we have an example of this right away, right here, right? See, this is a payment. So the payee is a transfer from the staging account, but it's only $30. It's only $30, and obviously that's too low because we have, even the very first transaction, let's say that, well, the first two transactions, right? Let's say that the statement date ended there. This is still too low. $30 does not cover what the statement balance is. So lo and behold, I went into US Bank website and checked the autopay settings, and it was still on minimum payment. So that's why I'd only paid $30. So while I was in there, I set up another payment to cover the rest of the statement balance that I have. So in a couple of days, we should see a transaction go through of this amount to clear this all out. Otherwise, I would have ended up carrying a balance on this card. And that's not what we want, right? Because we have it over here in the Autopay Statement Balance. Had I not had this budget, then I wouldn't have noticed it. And if I had been doing it manually is the other thing, right? If I haven't been looking at all my transactions and doing this exercise that I'm doing twice a month, it really takes like 15 minutes. Like, you have time to do this. If I hadn't been doing this, I would have thought, okay, it's on automatic payment, right? And I would have just been paying the statement balance until I noticed that. Maybe I looked at my statement for some reason or had to log into my bank. I never log into my bank, by the way, unless I have something very specific to do, right? But this was a trigger to tell me, oh, wait a minute, that's wrong. There's something wrong there. So now I got to go and check what that is, right? But if I hadn't been doing this, if this machine hadn't been built, it could have been a problem that just compounded over months, and I wouldn't have noticed it. So that happened a couple other accounts too. And I don't know why or what happened, but it happened in a couple of accounts. So we're just going to keep going here. We got a few more to do, right? This one is set. This is also a payment. So it's nice because now this is 0, right? And we know that that's what it should be doing. So the Discover card actually went in and checked on the Discover card too. And it was set to full statement balance, so at least that one went through. Okay, so the credit balance refund. In the previous video, I wondered what this was. And in the mail, when I opened my mail, I showed that I got that check from Discover of $35. So what they did was basically they sent me a check in the mail for $35, and that's what this is right here. So to make it just super simple, I'm just going to say it's a transfer from the Discover Miles card. It's an inflow here, and it's an outflow over here. And YNAB's pretty smart, right? It linked that transaction because it was the same dollar amount. All right, so insurance, this is a category of car. The insurance was up, so I had to renew it, and I'm only renewing it for another month because I do plan on having that sold within the next 30 days. Next account that we have is this one. This is a subscription, so it's pretty straightforward. That's all we got to do there. And next one is reimbursable expenses. So this is actually a kind of an issue that I have with YNAB. It tries to be too smart sometimes. And it categorized this as a transfer from staging to reimbursable, but it's not. I actually don't remember what this is, and it doesn't really matter because it says it's in August, which is today, which is a little bit strange, but I'm going to go see. I'm going to log into the staging account later on and check what that is. So let's do this one. Yeah, so this is that other account, right? So I'm going to look at that in just a second here. So here's that $600 payment that we sent to the Amex Surpass, right? It hasn't gone through on this card yet. So, but what I'm going to do is I'm just going to say, because I know what it is, it's a payment to this card, and I'm just going to approve it at $600, right? And then we're going to see it over here. And when that comes through, it's just going to automatically, be the same transaction. That transaction is going to be linked. All right. So this was also a car expense. It was a smog check. In the PRC, you have to get smog certified before you can transfer the car title over to another owner, even though they're going to have to do it in like a year anyway. I don't know. It's a big industry, smog. All right. And then this is the other thing that got me to see that, oh, wait a minute, this is not right, right? So this is a payment to my American Express cards. They're both $39, so I guess it doesn't really matter which one I use to be yeah, it doesn't really matter which one I categorize as what, but you can see that the outflow from here is only $39, and into here, I mean, the balance on this card is 226, and the balance on this one is 177. So that's a problem. So I logged into American Express portal, and I saw that, yeah, the minimum payment is still selected as that, as the payment method. So that's what it was. So I caught that. And the only reason that I caught that is because of what was going on right here, because the numbers didn't make sense. So what I did while I was logged in there, I went and set up a payment to, well, I did two things, right? I actually changed the autopay to match this source of truth over here. And then I set another payment to happen. I set it to happen on Monday to cover the rest of this balance here. So that's all going to go away in a few days. So what I'm going to do now, just to get this last transaction done, this is my paycheck. Just to get this last transaction done, I'm going to just pause the video here real quick, go log into my account, and just see what this is so I can remember. All right, cool, I'm back. So I remember what this is. This was a payment at a Shell store. I don't know, Shell gas. I don't have it in there. And the category was car, because I got a car wash for $10. So that's it. All of July is in there. And this actually, I'm going to change the date from August to July 31, because it technically did happen on the last day of July. So might as well just include it in there. All right. So now we're going to do something that we have done before. It's nothing new. But we're going to update the income statement. We're going to update the cash flow statement. This is what I did a little bit before. just kind of show what was going on here, and I created the savings ledger for myself. This is like money that I'm saving for other reasons, right? Just to kind of keep track of it that way. And then we're going to update the balance sheet. And we're going to update the balance sheet on today's date, which is August 1st. All right, so same exact thing as we've done before, nothing new. So I'm just going to go ahead and do that now. Oh yeah, so for my salary, what I'm actually doing is putting the gross here and then subtracting the taxes. So I'm going to pause the video again while I go and look up what my gross is and take out the taxes. So I'll be back in a second. Okay, so there it is. We got the total income for the month, $3,093. All right, so now we're just going to go through the budget here for July and put in all the expenses that I incurred. All right, so it's more than last month, that's for sure. And we take the income minus expenses. Our net income is $260 for July. So now onto the cash flow statement, net income. We just copy it from up there. And now we're going to find out what the new debt was. All right. And remember, to do that, we have to subtract all the cash transactions that we incurred and just look at what we spent on credit cards, basically. Right. And look, the reason that we're doing this, it's a little bit different from the income statement. And you might be thinking, well, if I just pay off all my credit cards and stuff, then do I really need a cash flow statement? If you want to really understand what is going on with your debt and why you got into debt, then the cash flow statement is super important. It's super important to understand what's working there. So that's why we're doing it. It might seem a little bit redundant, but I feel like the cash flow statement is a super important part of your personal financial statements and your activity. And understanding what's going on in there is just going to set you up for more success down the line too. Okay, so it's the same exercise as before. We're just going into the line item here and putting the budgeted amount to equal the cash spending amount. So 0 cash spending there. Cash spending. All my insurance is now cash spending because the insurance provider that I switched to pulls directly from my checking account, which is pretty nice actually. It's quite nice. Of course, the voice in my head says, oh, but you're not getting the points anymore. But whatever, I don't really care about the points. Okay, and other 0. CC interest is all credit. Cash $279.97. All right. So in terms of new debt created, what we have is way too little, or way too much rather. Oh, that's why. There. Okay. They're all, what's it called? Yellow colored now. So perfect. That's the number that we're looking for. 923. Come on. 923.14. Okay, this is literally the amount of money that we use that we did not have. This is money that we borrowed from the credit card company, from the bank, and spent. All right. Cash back this period. All right, let's see down here. Cash back 0. And we have goods sold 45. So total cash flow inflows for this period is 1228.68. Okay, now we're going to look at outflows, and debt payments is very easy to figure out. It's just this amount right here. This is the amount that we paid down our debt, right? So you can see that here in the surpass category, we have the $600 that we spent, or not spent, but transferred into the debt that we owe on the card, right? And it's just a sum up of all the money that we sent over to these cards. Right? This one actually includes a little bit of something different, because this is what we paid and this is what we got in refund from the fast track. So it's just going to be included into the debt payment, because I mean, it's technically, technically we did pay it, but whatever happens. And this one is positive for some reason. Let's look into that, why that is. Oh, okay. So we didn't make any payments into this card right now, but our budgeted spending for this is $57.13. So that looks kind of iffy. Let me just figure out what the heck is going on here. I'll be back in a second. Okay, I see what's happening. So the card down there, YNAB is saying that this refund is considered budgeted spending. So technically we received money from this card, right? I don't know how much sense that makes, but that's how YNAB is calculating it. But anyway, the rest of everything looks pretty good, right? So far, that's all the that's all the money that we sent to the bank here. Okay, so what we're gonna put in here is $1360.05. So I want to show you something. If we look at this number here that we get debt payments, and if we look at the new debt created last month, basically the way that we pay off the credit card is that more often than not, we incur the debt in this month and then we pay it off the next month. So this is a good sign that the debt payments is higher than the new debt that we brought in, right? It should be higher because of the transactions or because of the credit cards that were still on the minimum payment only. And that's going to be corrected in a little bit. But next month, when we go into August, this number is going to be much higher than this number, right? This number is going down, which is also a good sign. It means we're incurring less debt to, as a shield for the debt that we got to pay off. So when we go into August, we already have a head start here with the 600. That's going to come into there. It's also going to be all the other additional payments that we had on top of the minimum payments on the cards that were messed up. So this number is going to be higher than new debt created in the previous month. So that's a good sign. Okay. So we have more outflows to investments. So we have $100 there. And I put this on pause for now because as I explained before, I don't want it to be something that's like there and we don't know what it is yet. I'm not ready to bring in the investments part. That's actually quite a little bit down the lines here. We're going to bring it in when it becomes relevant to the discussion. So I've effectively gotten rid of that transfer there. So in August, we're not going to see that. Total cash outflows for this month is $34.60, which brings our net cash flow to $22.31. So it's a big negative number this time. And it's because of this two savings, right? We created our emergency fund this month, and we put $2,000 into it. So that's what I did down here is this little savings ledger. Ooh, I'm glad you can see it. It was almost off the screen. I was like, oh, I'm going to have to re-record this whole thing. That would have been annoying. But any number that I put in here, right? If I put like 20, then it shows 20 down there. But any number that I put in here is basically going to become unallocated funds to which I'm going to allocate two different things, right? So emergency fund gets 2,000. And I guess what I'm going to do here is put like a, running balance of what all these things are so I can keep track of it month over month. I'll do that later. But, when I want to do different things, when I have different goals, like, I don't know, down payment or like room remodel or something like that, new this or that, then I'm going to just put it here and allocate funds to it from my cash flow as time goes by. That's another reason that we do the cash flow, right? Because even though the cash, like when we're putting it to savings, it's not really flowing out of our system. But in a way it is, because eventually that money is going to be spent. We're just outflowing it to a job, right? So when people say give every dollar a job, this is what we're doing here, literally. We're saying it's going to savings, and then we put it in the ledger onto the goal that it's going to be. So this is money that is going to be spent at some point. Well, except for really the emergency fund. We're gonna plan on never spending that, but we have this because of the worst case scenario. That's what we're doing. We're preparing for the worst case scenario, and when you do that, it usually ends up being a lot better than the worst case scenario. Okay, so what I'm going to do now is update the balance sheet. Pretty quickly, I'm just going to copy all these numbers. Nothing too exciting, nothing you haven't seen before. Okay, so for August, we're starting off August, a net worth that's, what is the difference here? About 2,000, a little bit less than 2,000, maybe 1,500. Whoops. 1,400, just under 1,500 higher net worth. So we're on our way. We're moving in the right direction, and this is going to be zero very soon. It's going to be zero very soon, guys. Looking forward to it. So that's pretty much it for this video here. I'm going to wrap it up. That's it.